All right, switching gears a little bit here. The U.S. economy continues to come on like a rocket ship. And even President Trump, somewhat today, trying to downplay the idea possibly this quarter could be 4.8%. But I got to tell you, I'm beginning to think it could be a 5% quarter. Consumer confidence is soaring. Retail sales are soaring. Corporate profits are soaring. Now, yes, there are wild cards from trade to the Fed, but I believe we're on the cusp of the biggest quarter, GDP quarter in a dozen years. Here now to discuss, Kristin Tate, author of How I Tax Thee, Jillian Melcher, Wall Street Journal editorial page writer, and joining us again, Ned Ryan. Kristin, let me start with you. Today, for instance, in the market, it could have a month ago, 2 months ago, the market would have been down 500, 600 points. We weren't off that much, and the news almost every single day, just phenomenal.
Yeah, I think the markets initially overreacted to the announcement of the tariffs several months back, but we've kind of had time to think and digest. So now it seems like these tariffs really won't have a big impact on the overall economic picture. The economy is roaring. You know, Charles, I'll never forget when Barack Obama was campaigning for Hillary Clinton. He said, Donald Trump says he's going to get the economy roaring, but he doesn't tell us how he's going to do it. What's his magic wand? Well, abracadabra, the economy in the second quarter is tracking 4% growth. We never even saw 3% GDP growth under Obama. Today, the economy is surging, manufacturing is on the rise, and unemployment is the lowest it's been since the year 2000. Things are good. This is no coincidence. Donald Trump and the GOP have been hard at work with the tax cuts, and I think it'll reflect well on them leading up to the midterm elections.
And Jillian, maybe it's the magic eraser.
It is.
Erasing those regulations, erasing those high taxes, erasing the sort of anxiety that profits are a bad thing, just sort of erasing that dark cloud that hurt businesses for a long time.
I think that's absolutely true. I mean, the tax thing is really important, but I do think the deregulation is equally important. For a long time, it was really difficult to succeed because government would constantly be holding you back. That said, I do think we're playing with fire on this trade thing. We've heard about how this is good and easy to win, not proving easy to win. We're seeing, China coming back at us with pretty significant tariffs.
Although, were you surprised that when they came back at us, our market rallied 200 points?
Well, I mean, it's going to be interesting to see how this plays out. We're talking about a 25% tariff on cranberries. That's Wisconsin. 25% tariff on soybeans. That's Iowa. This is a political move as much as it's an economic move.
Right. I do find it interesting. Soybeans, for instance, down 41% from their 2012 high when President Trump came into office. It was already an industry under a lot of trouble, but everyone's rooting for them now. And I think what it is that the fact of the matter is those are all political moves, right? They're not really economic moves.
Well, they're both.
And I mean, for China, because the EU also threatened the same things. They know, you made the point, they're Trump states. They're not targeting things that are manufactured in
California,
New York.
Right, yeah.
So the point I'm making, though, is that I don't know that I think people are getting hip to this. I think the markets are getting hip to it. And by the way,
they're seeing them as a negotiating tool.
Closer to resolution than we have, than by actually triggering these things instead of threatening them.
Well, first of all, I think the markets are realizing in the long term these tariffs are more of a negotiating tool to readjust. And I think what Trump is doing, not only with China, but also our European traditional allies, these are new rules of engagement. We're not going to operate under what we have been over the last however many decades, where China's been cheating. They have been dumping steel, undermining our steel and aluminum industries. I wrote about this in The Hill this last week. I think China declared economic war on us years ago. And it's time for us to say we're not going to tolerate this anymore. We're going to have new rules of engagement, and that will start with no more forced technology and full market access. I think the markets are finally understanding. The last thing I'll say about a trade war, we're nowhere near a trade war, and China will not tolerate a trade war because I think their economy is far more fragile than people think. The regime is built on the economy. If the economy collapses, regime collapses. Regime will not tolerate.
Well, they've got their issues, too, including 260% of debt to GDP. But I don't think they declared trade war as much as initiated it, right? It was like the mouse that roared. But having said all that, this economy, which barely makes the headlines, do you see this continuing? Because I see the momentum. I don't think it's going to go away anytime soon.
I hope so. But again, I think this trade thing it has the potential to curb it. I think it has the potential to pull it back and really hurt this animal spirit that we're seeing.
All right, well, we'll see.